While the world was sleeping, the greatest financial attack in history quietly began. Tanks did not cross borders, missiles were not fired, cyber attack sirens did not wail. There were no generals in the war rooms, only bureaucrats in gray suits and the sell buttons in front of them. The nuclear option, which has been whispered about for years, which they said they can't do, and which the elites in Washington underestimated by saying if they do it, they will hurt themselves, has finally been placed on the table. The People's Republic of China has begun a systematic, aggressive, and irreversible dumping of its U.S. Treasury bonds. This is not a portfolio adjustment. This is not profit-taking. This is a cold dagger plunged into the heart of American financial hegemony. And the place where this dagger has struck is the foundation upon which the entire global financial system is built, the U.S. bond market. Let me tell you what the media isn't telling you. That sudden stock market drop you saw last week was not a technical correction. It was a tectonic plate snapping at the bottom of the ocean. China has activated an $800 billion time bomb, and the countdown is racing towards zero. So why is this so important? Why does China selling bonds concern the money in your pocket, your bank account, and your retirement? To understand this, you need to understand how the system works or doesn't work. The U.S. economy lives on debt. The government spends, prints the money it spends, and sells treasury bonds to borrow that money. The rest of the world, especially China, has financed the American dream for years by buying this paper. What allowed Americans to buy homes with cheap credit and the state to cover massive budget deficits was China buying this debt. But now, that buyer is gone. Even worse, that buyer has now turned into the world's biggest seller. Economics 101 is very simple. If the seller of a good increases and the buyers decrease, what happens? The price crashes. In the bond market, a price crash means yields explode. The two are inversely correlated. As China vomits this paper onto the market, the U.S. Treasury is forced to pay higher, much higher interest to find new debt. The 4.5%, 5% yields you see on the 10-year Treasury right now are just the beginning. When China withdraws from the market, there is no other sucker to fill this void. The Fed, they are already wrestling with inflation. If they print money to buy these bonds, they will trigger hyperinflation with their own hands. China knows this. They're forcing Washington into an impossible choice. Either allow rates to rip to 7% or 8% and plunge the economy into a recession, or print money and turn the dollar into toilet paper. China's move is not just about red numbers on Wall Street screens. This is a nuclear bomb dropped on the real economy. Treasury yields are the reference point, the risk-free rate that determines the price of everything in the world. When China sells bonds, the U.S. 10-year yield rises. When the bond yield rises, mortgage rates automatically rise. Imagine home loans currently in the 7 to 8% band crossing 10%. The real estate market freezes, prices collapse. Credit card rates, auto loans, corporate borrowing costs, they're all pegged to this bond yield. By pressing a single button, China has doubled the borrowing cost for the average American, European, and investor. They have sucked up global liquidity like a sponge. There are dollars in the market, yes, but those dollars are no longer cheap. Those dollars are now inaccessible. This is a liquidity crisis, and a liquidity crisis is the deadliest type of financial crisis, because even if you have solvency, the moment your liquidity stops, you go bankrupt, just like a massive ship drifting in the middle of the ocean because it ran out of fuel even though its engines are intact. The world economy has just run out of fuel. But this is not where you should be most afraid. The real horror movie is playing out on the bank's balance sheets. Remember, why did Silicon Valley Bank, SVB, collapse in 2023? Because they held U.S. government bonds they called safe. But when REITs rose, the value of those bonds fell. When depositors wanted their money, the bank was forced to sell those bonds at a loss and collapsed. Now, apply this scenario to the entire banking system. Bank of America, JP Morgan, Wells Fargo, their vaults are stuffed with these bonds. China's aggressive selling is pushing bond prices to historic lows. Do you know what this means? The safe assets held by banks are currently melting away. They call this unrealized losses. They hide it with accounting tricks. They say, hold to maturity and don't write the loss on the balance sheet. But the market knows the truth. If there is a massive deposit outflow today, right this minute, the banks have no chance of selling those bonds to give you your money, because those bonds are trading 30%, 40% below the price they bought them at. China has targeted the collateral structure of the American banking system. If collateral becomes worthless, the credit mechanism stops. If credit stops, the economy stops. Do you know what those bureaucrats in Beijing see on their screens while sipping their morning coffee? Not a burning Wall Street, but a desperate Washington. This is not a trade war. This is a financial siege. China used the dollars in its hand as a weapon and pulled the trigger. This supply of hundreds of billions of dollars in bonds flooded onto the market has dried up liquidity. But this is just the beginning, because this earthquake in the bond market has triggered the darkest, most complex, and most vital organ of the financial system, the repo market. The blood flow has stopped, the heart is skipping beats, and the patient is dying on the table.
Most people watch the stock market. They look at the Dow Jones, the S&P 500, and they think that's the economy. They are wrong. The stock market is just the paint on the house. What I'm about to show you is the plumbing inside the walls, and right now the pipes are bursting. Welcome to the repo market. It is a $5 trillion a day shadow market that you never see, but without it, the modern world ceases to function in exactly 24 hours. Here is how the world actually works. Every night, major banks like JP Morgan, Goldman Sachs, and Citibank need cash to balance their books. Other entities have excess cash. They meet in the repo market. The borrowing bank says, "Lend me $1 billion overnight. Here is my collateral, a U.S. Treasury bond. I'll buy it back tomorrow morning for $1 billion plus interest." It is essentially a pawn shop for giants. And the gold watch in this pawn shop, the only collateral that everyone trusts, is the U.S. Treasury bond. It is supposed to be pristine collateral, the safest asset on Earth. But remember, China just nuked the value of that collateral. When China dumped $800 billion of treasuries, they didn't just crash the price, they destroyed the quality of the collateral. Suddenly, the bond that was worth $100 yesterday is worth $60 today. And in the repo market, this triggers a death spiral. Imagine you go to the pawn shop with a gold watch to get a loan. The broker looks at the news, sees the price of gold crashing, and says, "I can't give you $1,000 for this anymore. I can only give you $500. Actually, I don't want it at all."
This is happening right now between the biggest banks in the world. Bank A calls Bank B for cash. Bank B says, "Your collateral is crashing. I don't trust it. No cash for you." This is the moment the liquidity freezes. It's called a credit crunch. The oil in the engine has drained out. The pistons, the banks, are grinding metal on metal. The heat is rising. We saw a preview of this in September 2019. The repo rate spiked from 2% to 10% overnight. The Fed had to panic print billions to save it. But this time, the scale is 100 times larger, because this time the problem isn't a shortage of cash. The problem is that nobody wants the collateral. In finance, trust is everything. When trust vanishes, you get a Lehman moment. Right now, every bank CEO is looking at their competitors and thinking, are they exposed to the China dump? Are they holding billions in losses? If I lend them cash tonight, will they be alive tomorrow morning to pay me back? The answer is maybe not. So they stop lending, they hoard cash, they sit on their hands. The SOFR, Secured Overnight Financing Rate, is screaming higher. It is flashing red warnings that we haven't seen since 2008. The interbank lending market has suffered a cardiac arrest. So what, you ask? Let the bankers burn. I wish it were that simple. But the repo market is the bloodstream of the real economy. When repo stops, the contagion spreads to Main Street in 48 hours. Hedge funds that rely on repo leverage get margin called. They are forced to sell stocks to raise cash. The S&P 500 collapses 10%, 20% in a day.
Payroll companies use the short-term money markets to pay your salary. If that market freezes, your paycheck doesn't clear on Friday. Supply chains run on letters of credit backed by banks. If the banks hold on to cash, the ships stop moving. The shelves go empty. This is not just numbers on a screen. This is the credit card terminal at the grocery store saying declined, even though you have money in your account, because the bank on the other end is fighting for its life. In Washington, the Federal Reserve is watching the same screens we are, and they are terrified. They know that if the repo market stays frozen for another 24 hours, the entire U.S. banking system becomes insolvent. They cannot force China to buy the bonds back. They cannot force banks to lend to each other. They have only one tool left, the only tool they have ever had, the panic button, the pivot, the fire hose. China has forced the Fed into a corner. To save the repo market, the Fed must step in and become the buyer of last resort. They have to buy the toxic bonds that nobody else wants. And to do that, they have to print money. Not billions, trillions. We are hours away from the largest monetary injection in human history. They are going to flood the system with liquidity to unstick the pipes. But there is a catch. When you print $5 trillion to save the banks, you destroy the currency. China knows this. That was the plan all along. They crashed the bonds to break the banks, to force the Fed to kill the dollar. And while the West is drowning in paper money, look at what Beijing is buying with the cash they pulled out. They aren't buying euros. They aren't buying yen. They are buying the only asset that has no counterparty risk.
We are witnessing the end game. The Federal Reserve has been forced into the ultimate trap. To prevent the banking system from collapsing today, they must sacrifice the dollar tomorrow. The printers are warming up. The flood of new currency is about to hit the system. But while the West is panicking, preparing to dilute your wealth with trillions of fresh paper dollars, you need to look east to understand what comes next. Because China didn't just sell U.S. treasuries to sit on a pile of cash. They didn't dump the dollar just to hold another fiat currency that can be inflated away. They made this move with a very specific destination in mind. Follow the money. While Western central banks are distracted trying to plug the holes in the leaking ship, a massive fleet of armored trucks is moving physical wealth from west to east. We are seeing record delivery volumes at the Shanghai Gold Exchange. We are seeing premiums soar in Asia. China is taking the dying dollars they extracted from the U.S. bond market, and they are converting them at warp speed into the only two assets that have survived every empire collapse in history: gold and silver. This is the Great Rotation. For decades, the global financial system has been based on trust. Trust in the government, trust in the banks, trust that a piece of paper is worth something. But China has looked at the U.S. balance sheet. They have seen the $36 trillion debt. They have seen the exponential interest payments, and they have decided that the trust is gone.
They are decoupling. They are separating their national wealth from the toxicity of the U.S. financial system. They are trading promises to pay for payment in full. And this creates the perfect storm for the precious metals market. On one side, you have the Federal Reserve about to print trillions, which destroys the value of the currency denominator. On the other side, you have the world's second largest economy vacuuming up every physical ounce of metal they can find. The mathematics are undeniable. The COMEX and the LBMA in London have been suppressing the price of silver and gold with paper contracts for years. They sell metal they don't have to keep the price down and the dollar up. But you cannot print gold. You cannot digitally create silver. When the physical inventory is gone, the paper game ends. We are approaching the moment where the paper price and the physical price snap apart. This is the fiat fallout. When the dust settles, those holding paper assets, stocks, bonds, savings accounts, will be left holding the bag of a devalued currency. But those who followed the smart money, those who did what the central banks do, not what they say, will find themselves on the only life raft that floats. The window of opportunity is closing. The premiums are rising. The supply is tightening. The liquidity crisis in the bond market was the warning shot. The money printing is the fuel, and silver is the rocket. Don't wait for the news to tell you it's too late. The system is resetting right before your eyes. Paper burns. Silver remains. Secure your future. Be your own bank. Survive the fallout.